and then I'll pass it over to our Commerce Bank friends. So hello and welcome in everyone. Thank you so much for joining us today. My name is Hong Win and I'm part of the Careers and Professional Development team here at WGU. We're so excited to have this awesome springtime with you and to kick it off here with our friends at the Commerce Bank team for another great financial workshop. Today's topic is very relevant to the WGU community. We'll be talking about repaying student loans. We have Jamie and Matt here from our Commerce Bank team. So they will go ahead and lead today's session. Few housekeeping reminders. We do have the chat feature open. I see some great comments and engagement already, so please feel free to continue using that for any questions that might come to mind or just for some great engagement as well. Towards the end here, we'll have some dedicated time for some Q&A. So you can also put your questions in and we'll address those here at the end. Other than that, this session is being recorded and we'll send that recording out afterwards along with a quick survey. And it's just a couple of questions and your feedback helps us to continue to host great sessions like these. So if you can take a minute or so to finish that for us, that'd be fantastic. So other than that, I will go ahead and pass it over to our friends at Commerce Bank.
Thanks so much, Mom. Great introduction. I love it. Every time it is. Hi, everyone. Thanks so much for tuning in this afternoon. My name is Jamie Antalik. I'm with the Commerce Bank Workplace Banking team. We also have Matt Edmond here from the Workplace Banking team. He'll be taking care of all things in the chat for us, along with providing some helpful resources throughout our presentation. During this session, we will explain the tools available to a student loan borrower and the many repayment plans in place to suit a variety of financial needs. You will also learn strategies and methods for making the repayment process easier, including a few opportunities when debt might be alleviated. Finally, the course tackles that common fear of what might happen if you are unable to repay your loans and offers guidance about proactive measures you can take to prevent student loan default. On our agenda, first we'll discuss what is My Milestones by Commerce. Next, we'll learn why financial wellness is important, followed by a course for repaying student loans. Then we'll finish up with a call to action and any questions you might have. If you are not already familiar, My Milestones is a financial wellness platform that provides objective, interactive tools, education, and solutions to empower users to take control of their finances. Because we understand that everyone's situation is different, My Milestones provides content on financial education topics that are relevant and personalized to you. To grow your financial knowledge, the platform offers a variety of learning mediums such as courses, interactive tools, articles, Start Here guides, videos, infographics, and webinars. With My Milestones, you'll be able to take control of your personal finances. Did you know that 43 million is the total number of Americans who have outstanding federal student loan debt? $20,700 is the average federal student loan balance for public four-year graduates, and $22,200 is the average student loan balance for private institution graduates. These numbers highlight how common student loan debt is, but with My Milestones, you can create a plan, stay organized, and take confident steps toward paying it off while supporting your overall financial goals. We're going to start out by accessing My Milestones, which is where we're going to learn more about repaying student loans today. For those of you who currently have an account, we'll move forward with logging in. And for those that are new to My Milestones, we'll have you sign up today. To either log in or sign up, please use your phone's camera application to scan the QR code, or you can also visit the URL that Matt is going to drop in the chat for us, which is wgu.mymilestones.com. If you're signing up, you're going to be asked for your name, email, and for you to create a password. And if you're returning to My Milestones, simply sign in with your username and password. I'm going to pause here for a moment just to give you time to log in or sign up before we make our way into the My Milestones platform. All right, I'm going to go ahead and navigate us right over to the My Milestones dashboard here. Now, my dashboard might look a little bit different than yours, and that's okay because My Milestones customizes information to how you interact with it. If you're a new user to My Milestones, you're going to notice colored tiles recommending 4 different actions. First up, underneath your next priority is a welcome message we always encourage you to take a look at and read through. Then there's a purple Get Recommendations tab, which is where you're going to find something called the Financial Wellness Checkup. It does take about 5 minutes to complete, but it's really important because it's how My Milestones learns to deliver your personalized recommendations. Next is the green tab for discovering your money personality. This is a quick and fun way to learn what your money habits say about you. And it also gets behind the psychology of how your brain ticks when it comes to how you think about money and finances. Then there's the red tab for setting your streak goals. This allows My Milestones to learn how often you would like to engage with it. You can choose between monthly, weekly, or daily interactions, and then experience points can be earned by interacting with the platform. Those points can be used toward the monthly Sprout sweepstakes, where you can win cash from a $1,000 prize pool. So this is not only a great way to gamify your My Milestones experience, but also an excellent way to win some free money. For more sweepstakes information, just navigate over to the left side of the screen. You might have to click on the garden tab first, but then you'll notice the sweepstakes tab there to learn more. And last but not least here, let's take a closer look at the Commerce Bank Solutions tab. This is just a really great resource that can be used to connect with Commerce team members for support. Maybe you need a financial advisor or a banker. All you have to do is click on the Email Commerce tab, or there's also a customer care phone number available here as well. Now, I know we're discussing student loans today, so we're going to head up to the top of the page to the search icon, and we're going to be looking for the course Repaying Student Loans. So again, top of the page here, we're going to select the magnifying glass. It'll produce a search bar, and I'm going to keep it simple here, and I am going to type in student loans. So as that pulls up, you're going to notice a couple of different courses. One is staying on track with student loans while in school. Another one is about borrowing smart and preparing for higher education. The one that we are focusing on today is repaying student loans, but I definitely encourage you to come into My Milestones and check out the other courses we have available too. So again, selecting repaying student loans for today, it's going to provide more information about the course. It's going to provide more information about what we'll learn during the course. It also has a great course overview. Prior to our time together, I completed something called the pre-course setup, which captures your baseline knowledge of information. So we are able to go ahead and move right into our course today. I am also going to be answering questions in an example form, but we encourage you to answer questions to your specific situation. And there are some quiz questions I might ask for your help with as we move through too. So let's go ahead and get started. All right, so it starts out with a poll question here, and you don't have to answer this in the chat, but definitely choose which one best resonates with you. How many years do you think it will take you to pay off your student loans? Less than 1 year, 1 to 5 years, 6 to 10 years, 11 to 20 years, or more than 20 years. For our example today, I'm going to go right in the middle and say 6 to 10 years. And now it's just letting us know where we stack up against others who have also taken this course in the past. And it's letting us know that 30% of people said 6 to 10 years like I did today. 26% said 1 to 5 years. 21% said 11 to 20 years. 14% said more than 20 years. And 9% said less than 1 year. According to various sources, most borrowers pay off their student loans in about 20 years, double the time than anticipated. Let's talk more about understanding your debt. The first step when starting any debt management plan is to know what you owe. Luckily, details of any and all federal loans you have taken out since first starting school can be found in one place. We have a video here about knowing what you owe.
Keeping track of your student loans isn't easy, especially if you've taken out more than one. Luckily, there's one place where you can find out exactly how much you've borrowed from the U.S. Department of Education and what you still owe. StudentAid.gov is the federal student aid website that is operated by the U.S. Department of Education. It keeps track of all the loans they manage, namely Title IV federal direct student loans, and in some cases, older Perkins loans too. You can log in anytime to see a list of your federal direct student loans and how much is still outstanding on them. It's important to note that if you have private loans or federal loans from federal agencies other than the Department of Education, these will not show up on studentaid.gov. In order to get access to the federal student aid website, you must first create an account. And to do this, simply go to studentaid.gov and click on Create Account, which will allow you to create an FSA ID. If it's not immediately visible, a search should get you there. The Federal Student Aid website is a great way to track your loan repayment progress, and it can also help you identify which of your loans are subsidized and unsubsidized, so you can prioritize which ones to repay first. It's important to remember that the Federal Student Aid website is not the same as your loan servicer. Although it can give you detailed information on your specific federal direct student loans, your loan servicer is who you'll need to contact if you have any questions about your loan or are struggling to repay your loan. Same goes for the servicers of any private or alternative loans you may have outside of the Federal Student Aid website. Being reminded of how much money you owe isn't exactly pleasant, but if you want to keep on top of your loan payments, it's important that you keep tabs on this kind of information. And with the Federal Student Aid website, it's never been easier to do just that.
All right, next up, we have a quiz question here. If you feel comfortable helping me out in the chat, let me know what you think, true or false. The Federal Student Aid website, studentaid.gov, is made available to students and former students only once they have borrowed more than $10,000 in federal student loans. Let me know what you think, true or false. I see false coming in. Perfect. Thanks so much for helping me out in the chat here. We're going to go with false. And that is correct. Great job, everyone. All right, so now we're going to talk more about choosing a repayment plan. So now that you understand your debt and have learned how to track it, you're ready to explore ways to pay it back. There are many, and one is right for you. Here's a video about repayment plans as an overview.
There are quite a few repayment plans out there, and if you can't decide on one before repayment starts, you'll automatically be enrolled in what's called a standard repayment plan. With a standard repayment plan, you'll be required to make fixed monthly payments of at least $50 per month for a period of up to 10 years. The monthly payment amount depends on your total debt, which must be paid off in 10 years' time. Typically, monthly payments will be higher under the standard repayment plans. But the benefit of this is that if you have a large balance, you may pay your loan off faster than on other plans and will end up paying less interest overall. Like the standard repayment plan, graduated repayment plans are also paid off over a 10-year period. However, they differ in that the monthly repayments start low and gradually increase over the life of the loan. If it's lower monthly payments you need, then there's always the option of an extended repayment plan. This plan allows you up to 25 years to pay off your loan. However, in order to qualify, your loan amount must be $30,000 or more. There's also the option of combining the benefits of the graduated and extended plans and opting for a repayment schedule of 25 years, wherein the monthly repayments start low and gradually increase over time. And lastly, there's the income-driven repayment plans, where the amount of your monthly payments are a percentage of your discretionary income. There are several different types of income-driven repayment plans, all of which are designed to work around your personal circumstances and make your student debt more manageable. While the selection of loan repayment plans can be overwhelming, you're bound to find one that works for your budget and life goals. And if either of those things ever change, don't worry. You can always switch to a different repayment plan along the way.
Let's talk a little bit more about income-driven repayment options. If you don't have a job lined up just yet, the thought of starting repayment can be daunting. Plans designed to work with your income might be right for you. A video all about income-driven repayment plans.
If you want or need to lower your monthly loan payments, then an income-driven repayment plan might be right for you. Essentially, an income-driven repayment plan bases your monthly payments on your income. The more you earn, the more you pay each month. These plans can extend your repayment plan up to 25 years. Any remaining balance at that point would be forgiven. But there are a couple of other factors that come into play as well. Along with your income, the amount of the loan you originally borrowed also impacts how much you'll be expected to pay back each month. Another big factor is how many dependents you have living with you. The more dependents you have, the less your monthly payments will be. The easiest way to see a realistic estimate of how much you need to pay is to visit the Loan Simulator tool on the studentaid.gov website, where you can enter all of your loan information and get a close estimate of what you need to repay each month and for how long. Once you've got your repayment estimate, you can go ahead and apply for an income-driven repayment plan. Just remember that since your income and family size are likely to change throughout the course of your loan, you'll be required to reapply for your repayment plan each year on the same date. If your application is approved, you will be placed on one of the following income-driven repayment plans. The Pay-As-You-Earn plan, which limits monthly payments to 10% of your discretionary income. The Saving on a Valuable Education plan, which also limits monthly payments to 10% of discretionary income, but also comes with an extended repayment period for some graduate students. The Income-Based Repayment Plan, which caps payments at 10% to 15% and follows a 20-year repayment schedule. The Income Contingent Repayment Plan, which comes with a slightly higher payment of 20% of one's income. And finally, the Income Sensitive Plan, which bases monthly payments on your income for up to 15 years. One thing to keep in mind, if you think you may qualify for a public service loan forgiveness, an income-based repayment plan is your best option. This way, you can keep your monthly payments manageable until the remaining portion of your loan is eligible for forgiveness after the 10-year period. A standard plan, on the other hand, requires that you pay off your loan within those 10 years. So even if you do qualify for forgiveness, you will have to have it paid off entirely, and there will be no balance left to forgive. If you think that an income-driven repayment plan might be right for you, speak to your loan servicer today to see if you qualify.
All right, we've got a quiz question here. Again, if you feel comfortable helping me out in the chat, let me know if you think this is A, B, or C. Which of the following repayment options is best for someone who is unsure of their future salary? A, deferment, B, standard repayment plan, or C, income-driven repayment plan? I'm going to go ahead and go with C here for income-driven repayment plan. And that is correct. That was a tough one, right? We're going to talk more here about making student loan payments. Once you have a repayment plan in place, what's next? Making consistent, timely monthly payments. How this plays out depends on the details. And we're going to move into breaking it down. Before I do that, I do want to click on this link, and Matt is actually going to provide that as a resource in the chat for us today too, just because we want to let you know that it is here. This is an estimated monthly payments for direct loan progress. So it goes through a lot of useful information that's here for you to take advantage of during the course. Next up, we've got an infographic here about simplifying student loan payments and some tips that are very useful and helpful. So starting us out, number one, know how much you owe. It's satisfying to watch that number drop each month, but also crucial to keep track of your outstanding amount in case there is an error and for long-term financial planning. Know your servicer. not just who they are, but also what they offer and how to contact them. Consolidate. Not every loan will qualify, and not every consolidation offer results in a better deal. But if it's right for you, consolidation can make for a more streamlined payment process. Pay off loans with higher interest rates first. If you have more than one loan and they are not consolidated, prioritize the payments for maximum savings. Remember to register for an online account. Set communication preferences, including opting in to any newsletters or update notifications, so you can stay up to date on any important changes that may affect your loans. Remember to enroll in autopay. There are multiple benefits to making automatic payments each month. No need to remember due dates, so no late payments, hassle-free transactions, which means no transfers, checks, etc., and in many cases, a lowered interest rate. Pay your servicer, not a third-party company. Be wary of third-party loan consolidation or forgiveness scams. There's nothing simple about getting duped. Always ask for help. If you ever find yourself in financial distress and unable to make a student loan payment, notify your lender immediately. They may offer solutions that will spare you from default. Lastly, routinely reassess your repayment plan. If you don't plan on receiving loan forgiveness or cancellation, it's wise to pay off your loans as quickly as possible. When your financial situation allows, consider making more aggressive payments. So again, just an infographic here that allows us to gain some information about tips and tricks to simplify student loan payments. Continuing on, we've got a video about debt management strategies.
The idea of carrying around tens or hundreds of thousands of dollars in student debt isn't a very pleasant one. For a lot of people, managing this much debt can be very stressful and very confusing. Fortunately, however, there are some strategies that can help. You just need to know about them. If at all possible, one of the best things you can do is to pay the accrued interest before repayment begins, thereby reducing the total loan amount when repayment starts. Once you're in repayment, you can also pay more than your monthly payment to potentially get ahead of your payment schedule. Just be sure to check with your servicer for details. In addition to paying off your loan faster, prepayment also helps reduce the total amount of interest being accrued on your loan, saving you money in the long run. For some people, however, the monthly payment is difficult to pay. For these individuals, there is always the possibility of changing to a different repayment plan if they feel their monthly payments are too high or that they may need longer to pay them off. If you're someone who has multiple federal loans that are becoming too hard to manage, then you might also want to think about consolidating them into one loan. This will leave you with just one single monthly payment and a longer period of time over which to repay your loan. It might also open you up to the option of loan forgiveness. Similar to changing repayment plans, loan consolidation can be done at any time and for no additional fee. All you need to do is to speak to your loan servicer. Your loan servicer is the company that oversees the billing of your student loan. But more importantly, it's the place to go when you need any advice on managing your student loan debt. If you're struggling to repay your loan, you can speak with your loan servicer anytime to get advice on changing plans and loan consolidation. One last note. A crucial component of managing your student loan debt includes knowing all options for loan forgiveness and discharge. If you're one of the lucky few, it's worth taking advantage of. As you can see, when it comes to student debt management, there are a lot of options and resources designed to help. And now, hopefully, you know how to use them.
All right, loan discharge and forgiveness. There's one type of debt management we haven't covered yet, and that's eliminating debt altogether. This ultimate solution, though possible, is very rarely available, but since we're interested, let's learn more. So this is a great article about will your loans qualify for discharge or forgiveness? Forgiveness, cancellation, and discharge all refer to the cancellation of a borrower's obligation to repay all or a portion of the remaining principal and interest owed on a student loan, but are generally used in different contexts. Starting us out, we've got forgiveness. It's typically used to indicate cancellation of debt due to a borrower's employment, whereas discharge is used to indicate cancellation of debt due to an error on the part of the school or on the borrower's permanent and total disability. There are some income-based repayment plans that will discharge debt that remain after your repayment period, provided you are in good standing and meet any other eligibility qualifications. There's the SAVE plan, Pay plan, IBR plan, and ICR plan that all include provisions that eliminate the remainder of your unpaid federal student loan debt after 20 to 25 years. You'll want to check with your servicer about the specifics of your plan and any requirements for loan forgiveness. Outside of these income-based repayment scenarios, there are additional programs that allow your loans to be forgiven, and some rare circumstances where your loans may be discharged. So this is a really great flow chart that allows you to find out if your student loans qualify for discharge or forgiveness. It starts out with a few questions, and then you'll answer those accordingly, and we'll give you some great results here. So depending upon your specific situation, you'll want to interact with this on what your situation looks like. There is a quiz question here. It's fill in the blank, so I'll go ahead and do that one for us today. Assuming you meet all eligibility requirements, how many student loan payments must you make to qualify for public service loan forgiveness? And we're going to go ahead and say 120 payments. Let's talk more about postponing payments. I'm sure you know what it's like to juggle bills, so you'll be happy to know that there are protections in place for postponing payments at logical times of transition. This is going to tell us a little bit more about postponing student loan payments, deferment, and forbearance. Most federal student loans offer a grace period after you graduate, leave school, or drop below half-time status before repayment begins. For student borrowers of federal subsidized and unsubsidized loans, the grace period is 6 months. Graduate Student Plus borrowers automatically receive a 6-month deferment, and Parent Plus borrowers must apply to receive deferment. Perkins loans offer a 9-month grace period, and if you're struggling to make payments on your student loans after the grace period, don't worry, there are actions you can take to ease the burden, and here are a few. First, contact your loan servicer. They may be able to switch your payment due date, offer a lower monthly payment, or suggest a more suitable repayment plan. Next, apply for deferment. A deferment allows you to postpone your payments for a specified period based on authorized reasons such as in school, unemployment, economic hardship, cancer treatment, and military service. During periods of deferment, depending upon the loan type, the federal government may pay the interest on your eligible subsidized loan. Then apply for forbearance. Forbearance is an arrangement that allows you to either postpone your monthly payment or make smaller payments for a specified amount of time. Interest will continue to accrue during the forbearance and may either be paid during the forbearance or added to your loan balance. Optionally, can you consolidate? If you have multiple student loans, which may be managed by different servicers, you can simplify the repayment process and reduce your monthly payment by consolidating your loans. This goes on to talk about key points to remember. And one that I want to highlight and call attention to here is this one that says, not everyone qualifies for deferment. And this gives a great link for eligibility guidelines. I believe Matt's got that one that he can provide for us in the chat as well as a great resource. And then right here, it's just kind of letting us know as a note that things are always changing or ever changing, and there's always new information that's available. So to get the most up-to-date information possible, you can visit the website studentaid.gov. Continuing us on here, this is a great chart that shows the difference between deferment and forbearance. So it gives you some situations that might be happening and then provides more information about if it's deferment or subsidized loans, deferment of unsubsidized loans, and then forbearance of all loan types. So again, check this out as you go through and review the course. We've got a quiz question here, and if you want to help me out in the chat, you feel comfortable, go ahead, let me know if it's true or false. During a deferment period, the government may pay the interest on certain types of student loans. Do you feel like this one is true or false? I see false coming in through the chat. I see a couple of false. I see a true. We were conflicting here. I'm going to go ahead and answer true for us today. And that is correct. They will help pay for that. More about navigating financial distress. What if you've expired all available repayment and postponement options and your financial situation is dire? Remember to always ask for help. Here's what you can expect if you don't ask for help.
Whenever you take out a loan, you make a promise, and the consequences of breaking that promise can be severe. To stay in good standing with your student loan servicer, you'll want to avoid delinquency and default. Put simply, delinquency is when you fail to make loan repayments on time. Your student loans become delinquent the very first day a payment is late. Depending on the type of loans you have, after a certain period of delinquency, your loans will be in default. For most federal loans, default occurs after the failure to make payment for 270 days. Why is this so bad? Well, the consequences of delinquency and defaulting are pretty serious. For example, typically, after 90 days of delinquency, your loan servicer may file a report with the 3 major credit agencies, and your credit score will take a hit. When you default on a loan, your credit score can drop even further. A low credit score makes it much harder to qualify for loans in the future and likely increases the interest rate on any future loans you may take out. And if a lowered credit score isn't bad enough, when your loans go into default, the government may even garnish your wages. Alternatively, your lender might transfer your debt over to a debt collection agency, which may demand that you repay the debt in full immediately. Failure to do this can result in having to go to court, thereby incurring even more expenses. Needless to say, any of these outcomes can have far-reaching consequences on your ability to live a financially secure and stable life. So, the best things to do: set up a payment plan that works for you and make timely payments every month. Avoid delinquency and, more importantly, avoid defaulting. You can do this by maintaining contact with your loan servicer whenever your financial situation or personal information changes, or if you just need help keeping on top of your loan payments. And if need be, you can always take advantage of one of the many debt management strategies that are designed to help you avoid defaulting on your loan. If you think you might be at risk of falling behind on your student loan payments, contact your loan servicer immediately. At the end of the day, this is precisely what they're there for.
All right, next up, this is a quiz question here. It is fill in the blank once again, so I can take care of this one for us today. How many days after missing a student loan payment do your loans go into default? So we're going to say 270, and that is correct there. Let's talk more about staying organized. The best way to avoid delinquency or default is to stay ahead of the game to begin with. With a few smart preventative measures, you can keep repayment under control. When in doubt, once again, ask for help. So this is some key financial aid and student loan contact information. The Federal Student Aid, or FSA Ombudsman, is a group under the U.S. Department of Education dedicated to resolving disputes related to direct loans, federal family education loan program loans, guaranteed student loans, and Perkins loans. The Ombudsman Group operates neutrally, meaning they are neither an advocate for the loan servicer or for borrowers. Their services are unbiased and confidential. If you have issues with your federal student loan, you can request the Ombudsman Group for assistance. So it goes on to provide for us a great contact phone number, a fax number, an address. There's also a website here. However, Matt is actually going to put in the chat for us a link that will get you to the FSA Ombudsman information a little bit more easily. I had noticed that this one was giving us a 404, if you will, was an error code. So Matt has got the right link available for you in the chat. All right, so now as we're rounding out our course, you can choose whichever one best resonates with you, but which of these behaviors are you most likely to implement or change to positively affect your ability to afford your future monthly student loan payments? Work in a public service for loan forgiveness, stick to a budget and minimize spending, aim for a higher income career, or apply for an income-based plan. And for our example today, I'm just going to choose stick to a budget and minimize spending because I feel like that's something that will continue to help my future self beyond just this information right here. All right, so now that we have completed the course, it's just wanting to let them know, excuse me, how we're feeling after completing the course. And I am feeling a lot better than when I started. And now that we've finished the course, there are some next step action items. We're going to go ahead and review the action plan. So it's going to start us out here with the completion certificate. It then will move on to our pre-score, post-score, and any kind of knowledge gain. It's going to provide our perception. Before we started the course, we were not feeling so confident. After the course, we were feeling a lot more confident. This is a quick review of the poll questions. And this is our personalized action plan. So I'm not going to read these one by one here. I do just want to call attention that this is here for you to get some next step action items as you go in and complete the course. Mine might look a little bit different than yours, but that's just part of my milestones customization piece. And again, just make sure that you're checking this out upon your course completion. All right, I know I've given us a lot of information to process and digest at this point. So before I head back to our presentation, just to wrap us up, I want to pause for a moment for any questions you might have. So please feel free to add any questions you have to the chat or come off of mute, and we're more than happy to help.
Thanks, Jamie. No curveballs in the chat so far. There was one question on whether or not we will be making this recording available, and this recording will be made available. We'll share that with Hong, and that will be distributed both via email and Handshake. So feel free to tune back in to that recording or share that recording with any of your friends or family that maybe weren't able to tune in today.
Thanks so much, Matt. I appreciate it. All right, we do have a call to action for you, and that is to please remember to take the featured course over repaying student loans, complete the student loan affordability tool, and read the article, How to Access Your Federal Student Loans and Grants. Now, we do have a few moments remaining before the end of our session, so Matt is going to drop a link for a quick 5-question survey that we always value your feedback on over our time together. So I'll give you a moment to get that started before we share our final contact information. Thanks, Matt. Sorry. I'm a little glitchy here on me for a second. All right, so as we conclude our time together, we have provided some contact information. In the event assistance is needed, we're happy to accommodate. Feel free to reach out with any questions that you might have. But we do thank you so much for your time today. We hope you have a great rest of your day. And we always look forward to seeing you and look forward to seeing you the next time around.
Awesome. This was fantastic. Thank you so much, Jamie. As we mentioned, this recording will be sent out, and then thank you so much for sharing your contact there. If anyone thinks of a question later on, you're always welcome to reach out, email us, or you can email Jamie here and we'll get that question answered for you. But as we wrap up today, just a couple of reminders. Our Commerce Bank team here does join us every month for different financial series topics. We've kicked off the year really strong. There's been a lot of great topics here. And so you can continue to look on Handshake for June and the rest of the summer sessions coming up here. Other than that, we'll go ahead and conclude. Thank you all so much for joining us and for your great interactions and questions here in the chat. I hope that you learned a lot. I know every time I join these sessions here with Commerce Bank, I always learn a lot as well. So we'll send out a recording along with that short survey. If you can please please get that completed for us. That would be fantastic. And then, like I mentioned, you'll continue to see these sessions here with our Commerce Bank friends on a monthly cadence. So feel free to check out Handshake for those. Other than that, of course, a big WGU thank you to you, Jamie, for leading today's conversation. You did such a fantastic job sharing the helpful advice and insights on repaying student loans. And of course, Matt, for running the chat and sending all that helpful information in there. Thank you again to our Commerce Bank team for joining us and sharing always such great insights with us. It's always such a fun time with you guys, and we value this partnership so much. So, wishing everyone a fantastic rest of your day, and we hope to see you at next month's session. Take care.